Hey everyone, and welcome back for another deep dive. This time we're tackling Peter Lynch's Learn to Earn.
Oh, yeah, a classic.
It's all about earning well and making smart investments. Really hoping this deep dive helps you take control of your finances and make your money work for you.
You know, it's funny. Lynch's style in this book is so approachable.
Yeah.
It's not like some stuffy Wall Street lecture.
Right.
He makes these complex ideas feel like something you'd chat about with friends.
I totally agree with you. He even compares picking stocks to grocery shopping.
That's a good one.
Instead of just grabbing whatever you see, he wants you to think about the value.
Makes sense.
What are you really getting for your money?
Totally. And you know, another thing that really stood out to me, he's really big on finding your passion.
Oh, yeah.
He thinks that can be a major key to financial success.
So it's like, follow your bliss and the cash will flow.
Right.
But is it really that simple? I mean, I love finger painting, but
Well, it's a bit more nuanced than that. It's not just about loving something. It's got to be something you're passionate about that also has, market demand.
so you're saying it needs to meet a need in the world.
Exactly. Think about it this way. When you're passionate about something, it fuels your drive.
Oh, I see.
And that can lead to success in any field.
Okay, so it's not just about the passion itself. It's about how that passion can translate into action
Right.
and ultimately results.
Exactly. And in this case, financial success.
So passion can be a powerful engine.
Yeah.
But it needs to be channeled strategically.
Absolutely. Now, on the flip side of that, Lynch is very clear about the dangers of debt.
Oh, yeah.
He calls it a slippery slope.
He's not kidding. I've heard so many horror stories. People drowning in credit card debt. It's a nightmare.
It can be. And the key here is understanding the real cost of borrowing.
It's so easy to get tempted by instant gratification.
Oh, yeah.
You buy something you can't really afford.
Right. And then those high interest rates, they can really snowball.
Ugh, I hate that.
It leaves you in a worse position than you started.
It's like running a race, but with a weight strapped to your back.
I like that.
You're constantly fighting an uphill battle.
A perfect analogy. And speaking of uphill battles, Lynch is a big believer in investing as a way to build wealth over time.
Yeah.
He talks about it as allocating money today for the purpose of generating profits down the road.
So you're basically putting your money to work.
Exactly.
But I think a lot of people find investing intimidating. They think it's just for Wall Street experts or the super rich.
That's a common misconception. And Lynch addresses that head on. He wants to empower everyday people to become investors.
I like that.
He breaks down different asset classes like stocks, bonds, and mutual funds.
Okay, so let's break that down a bit.
Yeah.
What exactly are asset classes?
Well, think of your money like an army.
Okay.
You wouldn't send all your soldiers into one battle, right?
No.
Asset classes are like different types of soldiers in your financial army.
Okay.
Stocks are your frontline troops. They offer high growth potential, but also carry more risks.
Good.
Then you've got bonds. Those are like your medics,
I like that.
providing stability and income, but with less potential for huge gains.
Right.
And then there are mutual funds. Those are like your well-rounded battalion, combining different assets for a diversified strategy.
So by diversifying across different asset classes, you're essentially spreading out your risk and building a balanced portfolio.
Exactly. It's like building a house with a strong foundation. You don't want it all resting on one pillar.
That's a great way to put it. Now, how do you figure out which asset class is right for you?
Well, Lynch stresses the importance of aligning your investments with your financial goals and your risk tolerance.
So what are you saving for? And how much risk are you comfortable with?
Exactly.
It's like choosing the right tool for the job,
Right.
right? You wouldn't use a hammer to screw in a light bulb.
Exactly. And speaking of tools, Lynch also highlights how investing in economic growth can benefit everyone.
Oh, that's interesting. How so?
Well, when you invest in a company, you're providing capital for them to grow. This can lead to more jobs, innovation, a stronger overall economy.
It's like a ripple effect.
Yeah.
My small investment could actually help create jobs and boost the whole economy.
Exactly. It's about participating in that collective growth, contributing to a more prosperous future for everyone.
That's a really cool way to think about it. Now, before we get too deep into specifics, Lynch really stresses the importance of setting clear financial goals.
Yeah, he makes a great comparison. It's like pursuing a postgraduate degree. You wouldn't just enroll in a random program without knowing what you want to achieve, right?
Absolutely.
Yeah.
So what are some key things to consider when setting those goals?
Well, first off, think about your time frame. Are you saving for something short-term, like a down payment? Or a longer-term goal, like retirement?
That makes sense.
That'll help you figure out what types of investments are best.
And what about risk tolerance? How does that play into goal setting?
That's crucial if you have a longer time frame. You might be more comfortable with higher risk investments, ones with the potential for bigger returns. But if it's a short-term goal, you probably want to stick with lower risk options to protect your initial investment.
So finding that balance between risk and reward, it really depends on your individual goals and circumstances.
Exactly. And once you have a grasp on those, your goals and risk tolerance, you can start exploring specific investment options.
Now, I know a lot of people are curious about the stock market, but it can seem really intimidating.
For sure.
What does Lynch have to say about that?
He gets it. Those concerns are valid. But he also highlights the potential for high returns, especially over the long term.
But isn't the stock market risky? I mean, you hear stories about people losing a ton of money.
There's definitely risk involved, no doubt.
Yeah.
But Lynch encourages a shift in perspective.
How so?
Instead of fixating on those short-term swings, he advocates for a long-term approach.
Riding out the bumps in the road.
Exactly. It's about focusing on the fundamentals of the businesses you're investing in.
Like being on a roller coaster. You're going to have some dips and turns,
Yeah,
but ultimately the ride goes up.
that's a great way to put it. And, you don't have to navigate this alone. Lynch actually points to mutual funds as a valuable tool.
Oh yeah, mutual funds. Tell me more about those.
Imagine a bunch of people pooling their money together to invest in various assets. That's essentially a mutual fund.
Okay.
It lets you diversify across a wider range of companies than you could probably do on your own.
Interesting.
And they're managed by pros portfolio managers who make the investment decisions.
So you kind of have a team of experts working for you.
Exactly. And there are tons of different types to choose from.
What are some of those types?
You've got index funds, which try to match the performance of a specific market index like the S&P 500, generally low cost and considered a passive approach.
Okay.
Then there are actively managed funds, where the portfolio managers are actively buying and selling to try and beat the market.
So those are more hands-on.
They are, and get this, Lynch even recommends mutual funds for experienced investors. He says even seasoned pros, like himself, use them to diversify their portfolios and get exposure to certain sectors or assets.
So mutual funds seem like a great option for anyone, whether you're just starting out or you've been investing for years.
Absolutely. Now, earlier you mentioned something called SIPs.
Yeah, SAPs, you said they were a convenient way to invest?
They are. SIPs, or systematic investment plans. They're a super handy way to invest in mutual funds regularly.
Okay, walk me through that. How do they work?
It's like setting up a financial autopilot system.
No.
You choose a mutual fund, decide how much money you want to invest, and set a schedule for those investments, maybe monthly or quarterly. The money is automatically deducted from your account and invested in the fund.
So it's like a set it and forget it approach.
Yeah, exactly.
I like that. But what are the real benefits of investing this way?
Well, a couple of major advantages. First, it promotes discipline and consistency. You're not trying to time the market or making emotional decisions.
And that's a lot of sense. Because when I try to time the market, I usually mess it up.
Right.
Buy high, sell low, not ideal.
Exactly. SIPs take the emotion out of the equation. And second, they leverage something called rupee cost averaging.
Rupee cost averaging, what's that?
Think of it like buying mangoes at the market every week.
Okay.
Some weeks the price is high, some weeks it's low. By buying a fixed amount every week, you're naturally buying more mangoes when they're cheap and fewer when they're expensive.
Makes sense.
Over time, this averages out your cost,
Right.
which is a good strategy in volatile markets.
That's a great way to explain it. So even when the market's going crazy, you're still building your portfolio in a steady way.
Exactly.
It's like you're automatically taking advantage of those market dips.
Exactly.
So with SIPs, even if the market's all over the place, you're still steadily building your investment portfolio.
Yeah.
You know, that brings us back to one of Lynch's big themes, finding your passion.
Oh, absolutely.
He really emphasizes how important that is, not just for personal satisfaction, but for success financially too.
It's like he's saying, don't just work for a paycheck, work for a purpose. When you're genuinely excited about what you do, it can really drive your creativity and ultimately your earning potential.
He gives an example in the book
Yeah.
about people who are passionate about their work.
Mm-hmm.
They're more likely to go the extra mile, come up with innovative solutions,
Right.
really excel in their fields.
And that often leads to greater recognition, career advancement, and yeah, even financial rewards.
So it's not just some feel-good advice. Finding your passion can actually be a game changer financially.
It really can.
It reminds me of entrepreneurs, you know, the ones who build businesses based on their hobbies
Yeah.
or things they're truly passionate about.
They're not just clocking in and out, they're building something they believe in.
Exactly, they're building legacies.
Like, think about Oprah Winfrey. She took her passion for connecting with people, sharing their stories,
Yeah.
and turned it into a media empire.
Such a powerful example of how passion can drive financial success.
It's inspiring.
Okay, so we've talked about passion. We've explored how to steer clear of that debt trap. But before we wrap up this deep dive, I want to circle back to something I think a lot of people struggle with.
What's that?
Fear and uncertainty when it comes to investing.
Oh, yeah. That's completely understandable. The financial world can seem, well, complex and intimidating.
Right, especially with all the jargon and the constant news about the market going up and down.
But Lynch makes a great point. Knowledge is power.
I like that.
The more you understand about investing, the less scary it becomes.
He even encourages readers to think of themselves as detectives.
I love that.
In the financial world, constantly searching for clues, gathering information to make smart decisions.
Exactly. It's about becoming an educated investor, not just relying on gut feelings or following the crowd blindly.
So what are some practical steps someone can take to overcome those fears and become more confident about investing?
Well, first and foremost, educate yourself.
Okay.
Read books, listen to podcasts, take online courses. There are so many resources out there these days to help you grasp the basics.
And don't be afraid to ask questions.
Yeah,
Even if they seem basic.
exactly.
I think a lot of people are hesitant to ask
Yeah,
because they don't want to sound silly.
and that's a shame because there are no silly questions. When it comes to learning about your finances,
It's true. Everyone starts somewhere.
exactly, it's like learning a new language. You start with the alphabet and gradually build your vocabulary.
Right? And the more you learn, the more confident you become.
Exactly.
Another thing Lynch stresses is having a long-term perspective.
Yeah, he talks about how the stock market, despite those short-term ups and downs, has historically trended upwards over time.
So it's about focusing on the long game,
Exactly.
not getting spooked by every little dip.
It's like planting a tree. You don't expect it to become a giant oak overnight.
I love that analogy.
It takes time, patience, and consistent nurturing.
And remember, you don't have to go through this alone.
There are financial advisors, investment professionals, even online communities where you can connect with other investors and learn from their experiences.
So if you're feeling overwhelmed or unsure where to begin, don't hesitate to reach out for help.
Absolutely.
There are people who can guide you and support you on your financial journey.
For sure.
Well, that brings us to the end of our deep dives into Peter Lynch's Learn to Earn.
We covered a lot of ground today.
We sure did, from the power of passion and the importance of avoiding debt to the ins and outs of investing in stocks and mutual funds.
Hopefully you found this deep dive helpful and inspiring.
Absolutely.
Remember the journey to financial well-being. It's a marathon, not a sprint.
That's right.
Start small, educate yourself, and don't be afraid to ask for help along the way.
The key takeaway here is to start taking action today.
Even a small step can make a big difference over time.
That's right.
And always remember, keep learning, keep growing, and keep exploring the world of finance.
It's a fascinating journey with endless opportunities to create a brighter financial future for yourself.
Couldn't have said it better myself.
Until next time, happy investing, everyone.